careful.
Yeah.
This one back there. Okay, sorry. Try out because I think this one there is for the.
Is this for the mic?
No, wait. Yeah, is this one right?
This is this one. This one.
Ah, this one.
Yep. You've got the green forward and red backward.
Yeah.
Okay.
This one is when you connect your own computer.
Okay, got it.
To work on that.
Okay, got it.
And try to keep it around here and do that move like that.
Okay. Got
No
it.
pressure.
Yeah.
And are you guys are pushing the slideshow for me?
They're going to start the slideshow.
Oh, okay.
You just have to go forward or backward.
Cool.
Is it yours?
That's mine.
Great.
Yep. I can start
When you want.
when I want.
When you want.
Check. Okay. Hello, everybody. I'm so excited to be here at ETHCC. This is like very surreal for me to get to be on this stage. Thank you very much for coming to my talk. My name is Megan Knab, and I run a company called VeryLedger. We build accounting software for Web3 businesses, and wanted to share with you guys some learnings over the past year of working with DAOs from the perspective of a balance sheet and like maybe a little bit more of a business perspective. And also some ideas on the future of corporations going forward. So, so you guys know, the organizations that I've worked with recently that are sort of like the fundamental underlying for this talk are DORG, which is it's a developer shop. They're a for-profit company. They're built on top of DAO Stack. Marketing DAO, which is a Moloch fork, a grant-giving organization. Orochi V1, which was a party planning DAO. Some of you, if you were at DevCon, may have come to our whiskey tasting event. And OneHive, which I've done some consulting for. So across different platforms, I think it's generalizable DAO learnings. So if you guys don't already know, balance sheet is a type of financial statement. It is a really important document. It's what Wall Street analysts use to value companies. It's how you price initial public offerings, and generally how you get a picture into the financial health of a company. And if anybody has taken an accounting class or has gone to business school, this is like one of the first things you learn. It is a very simple formula that says assets are equal to the summation of liabilities and equity. So this is a fundamental underpinning for business financials. And it is a seemingly simple formula, but lots of companies get it wrong. Just like a quick example, over the past 10 years, just going back not that far, we've seen tons of publicly traded companies need to restate their financials because they get that very simple formula incorrect. It's on the order of billions of dollars, just a few large examples from the past decade. It's a problem for shareholders. They don't have an understanding of how much their assets are worth. And it's a problem, it ripples out to the global economy, right? We don't really know what production is. And all of these companies are audited by some of the most premier accounting firms in the world. So we can see that our accounting infrastructure system is just not working very well. And it's a problem that's not only siloed in corporate America or in the Western world. We've seen accounting scandals happen in our own industry as well. So how do we think about solving these problems and getting a true financial picture into what's going on? Because assets being on chain is not quite enough. Right, so here's our formula, our fundamental underpinning. And then, how this sort of idea of the balance sheet came about is, when we look at the history of how companies have come to be in their current form, right? We can go back very far, but starting at, the sort of fiefdom level, right? We had landowners owning the means of production and exploiting their workers. We started to see in medieval times governments subsidizing public good institutions like hospitals and universities, with the ultimate goal of providing for a better society, but also being able to extract wealth more efficiently from its population. And then, very famously, right, in the 1600s, the Dutch East India Company created the first joint stock company, which was a way for shareholders to come together to sort of share risk and more efficiently allocate resources, as well as, maximize profits. And companies haven't really changed that much since the 1600s. They really follow the same basic structure. And if you go to business school, it's not like they just teach you trends about what is cool in corporate America these days. So it's a very similar structure. But one notable thing in the Western world is that companies have the same legal standing as people, which to me is just bizarre. A company has the same sort of rights that I do in America as a human being, and much more power generally, right? A lot more assets than your given average person. But as I've gotten to be involved in this environment, and especially working with DAOs, I really think that DAOs could be, there are a lot of things, right? But they really can be the sort of next generation of what a company can be. So let's dig into it a little bit. Here's our balance sheet formula. But let's look at it a little bit of a different way, right? All of the elements of the balance sheet are sort of in tension with one another in your sort of standard company, right? So also, when you go to business school, they teach you that the main object of a company is to maximize shareholder value, right? So the point of every company, unless you have a particularly motivated CEO, morally motivated CEO, or mission-driven, right? That is the main pressure that people running companies have to do, right? So very standard, you have owners pumping assets into the company in return for equity, and everything that kind of happens in between is, for the most part, a liability, right? So it's a cog in the machine trying to maximize shareholder value. And for the most part, we've seen in modern history companies sort of become more apt to giving out equity and things like that, and trying to help their workers have more of a share in what happens in the business. But it's still very much a top-down structure. And the things that happen in the middle, right, your supply chains, your employees tend to get squeezed, especially if times are bad, right? We've seen it in every financial crisis since, forever. Ways that companies look to maximize shareholder value is by horizontal and vertical integration. Horizontal integration quickly is just when companies buy other companies to become dominant in an industry that's not part of their core business. So Disney buying Pixar is an example of that. Vertical integration is when companies acquire other companies to streamline their operational chains. So Target owning manufacturing for their own branded products is an example of vertical integration. So where do we in our cryptocurrency, the Ethereum environment, sit when we're building new businesses to support the new technologies that everybody in this room is working on? How do we sort of figure out how to balance this tension and history? There is, some people in the meta-cartel world have indicated that DAOs are really nothing more than a multi-sig, right? And to some extent, a big part of a DAO is that it's a multi-sig and it's just kind of fancy. But I would say that a DAO is actually quite a bit more. And fundamentally, DAOs must integrate in their business structure, just given how they move funds around, right? If you want to get paid from a DAO, you generally, right, have to pledge, and you become part of their equity section by obtaining shares. To me, DAOs are actually the fundamental, actual manifestation of what a balance sheet is, and that's a very cool thing. So what I would propose, somewhat ironically, is that DAOs actually grow by doing decentralized integration. So in any DAO, you have your core contributors, right? The people who are making the company run. Maybe they started it. They're the main means of production. But they also have customers, right? Whether it's a grant-giving DAO, whether you're working for clients, these people, by nature of interacting with a DAO, become part of your cap table. Maybe it's only for a little bit, maybe it's for a longer time, but you're actually integrating the people that you're working for into your business. You have suppliers too. Maybe it's just a GitHub repo that you pay a subscription fee for. Maybe it's something else. Your suppliers become actual parts of your company, which is really interesting. Professional services, right? I do accounting. And in the example of DOrg, I'm actually a member of their organization, even though I'm just a service provider. And I receive equity in the form of rep for my contributions. So it's not a one-to-one transaction where I just deliver them, they pay me. By nature of interacting with them, I have a vested interest in their success going forward, which is very cool. The last thing, and this hasn't happened yet, but I feel like it may be the future, is companies need to pay taxes. Some places accept taxes in cryptocurrency right now in the United States, at least, and the government, right, doing that transaction, they become part of your DAO too. So you have this sort of pandemic-like effect with everybody that you interact with within your company when you use a DAO structure. And to me, the way that I see it is you don't have that same kind of tension that you do within a balance sheet where it's sort of like a cog, you're looking to minimize your expenses at the cost of your employees or your supply chains, right? You're actually building up created a shared value system. So this is my little Ethereum logo shill. Looking back at the past year and even into 2020, we've seen tons of product innovation, the stuff that you guys are working on in this room, and generally at this conference and outside of it, are amazing. We've made so much progress in so many different areas, and decentralized finance, notably, but also things like marketplaces and gaming. It's really cool to see. But my worry from my sort of back office perspective, being an accountant, is we're really not innovating in our business structures. We're kind of going back to the same things that we already know, that have been done for the past couple of 100 years. And the Web3 ethos really doesn't fit that kind of structure any longer. DAOs have been experimental technology, for sure, especially, Moloch DAO was launched a year ago and sort of created maybe a rejuvenation, in my opinion, of DAO structures. But I think now in 2020, we can move away from this idea that, oh, DAOs are kind of weird or they have strange branding schemes. They can be a fantastic tool for your business to create democracy. And it also makes business sense at the bottom line. So this is from my slides at ETH Denver, so sorry if you've already seen it. But this is a look at DOrg. So this is their compensation overview. And it also represents the voting power in their DAO. So they're running a fairly decentralized organization after less than a year in operation. And that's very exciting. The founding core contributors no longer have 2/3 voting power, which is what they need to pass proposals. And they, are making money. They service clients in this industry. They have a very traditional sort of business opportunity that they have incorporated into a DAO structure and have been very successful. Looking at their overhead, they also, part of it is for being a developer shop, but the DAO structure allows them to have really low overhead from a financial perspective. And their use of the DAO stack contracts only cost them $24 last year. So that's hundreds of thousands of dollars of value. It's over 350 transactions. That's way less than you would pay for a month using PayPal or Stripe or something like that. So they're hyper efficient. Also, one of the questions is well, we don't really want to use crypto because it's complicated and there's taxes and blah, blah, blah. Maybe we'll lose it all. Looking at the DOrg case study again, they're like sort of gains and loss on each of their transactions. They, on average, lost $7. It was mostly because of the dip in the price of Ethereum. But if you adjust it for their stablecoin transactions, it's less than $1. And that is like really cool, because if you were to use ACH transactions or wires or other sorts of money movement mechanisms, it's like $50 a transaction or more, and it's really antiquated, and it doesn't fit with the sort of like, structure of a DAO. So cryptocurrency risk, not so much of a risk in my opinion, but you have to manage it. So thinking about how do you actually fold a DAO into your business, there are a couple of considerations so that I came up with from my work with these organizations. I would be curious to hear if you guys have any others. But because you're creating a system of shared value from an equity perspective and from an assets perspective, you need to think very carefully about who you want to be sharing that value with. Because not only are you paying them, they're actually becoming part of your company. And something that OneHive in particular has been thinking about is, do we create different sorts of classes of shares for the different contributions that people are making to the organization? It's actually a really great way to sort of organize yourself. So that's a consideration. Is it a one-size-fits-all, or do you sort of customize it to the nature of the transactions you have? Also, how volatile is your asset pool going to be? By this I mean, are you going to have members coming in frequently? Are they going to be rage quitting quickly? All of that has an impact on how you think about your sort of equity level structure. And then also, this is something that we talk about a lot from an accounting perspective, is like watching your asset transformations. So there are great companies out there that help you move crypto around, like Multis, for example, is here. They do great stuff. Watching that you're not moving in and out of all of these different transactions makes things a lot easier for you from a treasury perspective. So those are my takeaways. I'd be curious to hear if you guys have others, and just DAO it. Thank you. Are there any questions?
Yeah. Anyone? So actually I have one. We just have 5-minute questions, so if you have one, get your chance. I have one question for you.
Yeah.
How do you see then the change if you start working with your suppliers, your customers, making part of the DAO? How do you see the transformations of the shareholders within the organization? Is it more like I'm going to incentivize them to come back, or will they have to transform as well the way they interact with the DAO in general?
Yeah, so how do you manage having all of these people kind of be part of your equity stack, do you mean?
Exactly, yeah.
Yeah, I mean, this is why you should be careful, right, about who you choose to interact with, because, there's certainly a situation that comes by where a supplier may not redeem their shares for a while, and then you have a weird disconnect in the value. But ultimately, if they're people that you want to be working with, I would say you want them to have vested success in your future. And it doesn't just have to be a one-off sort of transaction. So that's my viewpoint. But you got to manage it too, just like any cap table.
Okay, great. And yeah, perfect.
Hi. Thank you very much for your talk. Unfortunately, I don't know much about DAOs, but I'm fascinated by it since I'm starting a company right now. And the name would be decentralized autonomous organizations, that suggest that in a way they kind of autonomously control themselves, but I think that was not the point of your speech. So I want to understand, if I'm building a company and I want to use this system now, is it more capital intensive than going to a lawyer and signing the papers and distributing the shares in a traditional way? I mean, how much do I need to pay the developers to build this kind of system? Is it really competitive to the traditional way?
Yeah, okay, so two things I would say is that you can't just have a DAO and then not incorporate. It still lives as part of a legal jurisdiction. So you still have to incorporate a DAO, right? Marketing DAO is a Delaware LLC, Deorg is a BB LLC, lots of cool stuff going on in Wyoming, and blah, blah, blah. But launching DAOs has gotten a lot easier over the past couple months. So for Moloch DAOs, there's DAO House. You can summon a DAO like quite easily. DAO Stack makes it easy for you to do as well. So it's not like you have to build a development team to be able to launch it in your company. I would just view it as like this is a back office tool that you're using that can really streamline your expenses, but also your sort of like employee management. So.
Another quick question, like, does it only work if no one in the company owns more than the 2/3 ownership you were talking about? Like, yeah.
I mean, the more, it depends on each sort of stack that you use, but generally the more people that you have as members and the more people that you're paying, like the more decentralized your voting pool will be. So if you launch a DAO with just you and I, then we each have 50-50, you know. And you can think about structuring your shares differently too if you don't want it to be solely based on financial contribution. So I know that Metacartel, for example, has given out shares for sweat equity, which is very cool.
All right, we don't have time for more questions. Thanks a lot. Can you give a...